Today I'm gonna be telling you how to turn $10 to $100, my friends. But first of all, don't expect me to tell you something stupid like going buying lottery or going to buy a help self course. No. And don't get me wrong on this, but this could be very useful if you have some self-esteem issues, but otherwise that won't really make you turn $10 into $100. We all want to make money and we want kinda a guide to do it with very clear and easy steps, and that's what I'm gonna talk about here. And I know it won't be mind-blowing like you might expect, but it's the truth. I'm not bluffing you. And you can rest assured that if you follow these steps clearly, you will multiply your money in the safest way possible. First thing you need to know, this is not quickly. And if someone or something ever tells you that you can make money quickly, they are lying to you. Or they want to scam you. There is no easy and quick way to make money. The process of producing wealth is either slow or extremely difficult. You will often hear stories about people that make a lot of money very fast, but in the few cases this is actually true, it was just a consequence of their hard work. On the other hand, those who never break their backs, they spent years or even decades building their wealth. And here, my friends, are no gray areas. So what I'm talking about? I'm talking about things that historically have performed very well with yields between 20 or 30% sometimes per year. SP 500 and Dow Jones Industrials. And lately, the Nasdaq Index. I'm talking about index funds. So let's see how can this work for you literally. First of all, what is the S&P 500? It's the abbreviation for Standard & Poor's 500, a stock market index that pulls out the average of 500 publicly traded domestic companies, blah 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 blah. In a few words, is the index that makes an average that shows you how well or how badly these companies are doing. This index in particular have been recording earnings above inflation for 8% average per year. This means that if you invest right now, no matter how the market is doing at the moment, $10, in 10 years you will have doubled your money. In 20 years those $10 will be $47. But guess what? In 30 years those $10 will become $100. This is guaranteed by historical data. This is not assumptions, this is not fate, and best of all, this is the worst case scenario. Let me show you. We are in 1999 and you happen to be the most unlucky person in the world. You got the last $1,000 you have in your pocket and you invest it on an S&P 500. Its price was about $1,400 at the time. But then the dot-com bubble explodes and everything goes down. But you resist. You still hold onto your money. You keep your money invested no matter what. You just have to wait. Today, after all the financial crisis of 2008 and now the coronavirus pandemic, guess what? You still have your money invested, and those $1,000 are now $2,300. But what will happen if you invested those same $1,000 exactly 30 years ago? 1990. S&P 500 is about $335. Right now, at this moment, those $1,000 will be $9,500. Now, I would like to share with you which I think is the index with the biggest potential for growth for the next few years, due mainly to the nature of the stocks that compose it. The Nasdaq Index. The Nasdaq Index has been recording investments from 1985. It is an index of more than 3,000 stocks that compose it and includes the foremost technology and biotech giants such as Apple, Amazon, Intel, Microsoft, Oracle, many others. And this is what, in my opinion, makes this index the most attractive one for investments in a term of the next 20 years, maybe 25 or 30 years at least. Because as we all know, technologies will play a bigger part on our lives and in every aspect of our lives in the future. Every single part of our lives will be more affected by technology. So where's the scenario for Nasdaq? Take into account historical data. You bought $1,000 in 1999 and today will be $2,400. But what if you invested again those same $1,000 30 years ago? Now they will be around $34,000. 34 times your investment. This is completely true. I am not exaggerating. This is data that can be checked by you or by anyone on any website, on any financial website on the internet. So what's the big lesson we can take from here? Invest as soon as possible. Don't try to time the market. Hold to your investment, and the more time you hold it, the more money you will make from it. It's not quickly, so it's not going to be easy for those who are not patient, but it is the safest way you have to make money, exponentially. There isn't a single 30-year period in any of these indexes in which your return will be less than 6 times your investment. If that doesn't ring a bell for you, then nothing will. Anyway, I understand not everyone will have $1,000 right now to invest on an index fund and completely forgot about those $1,000 for the next 30 years. I got that. But you know what? Doesn't matter. Doesn't matter, because in fact, what I encourage people to do, my friends, my family, everyone I know, is to get the constancy of investment. And what I mean by this, I mean that you have to invest from time to time certain amount of money you could have, that you could save from your maybe your earnings or your salary or anything you sell, whatever. But mainly that money that you spend in things that you don't really need, which for a regular person could be easily between $50 and $100 per month, easily. If we do the math, and at your 20s you begin investing those $50 every single month on an index fund, by the time you are 50 years old, you have around $18,000. But if you invest those same $50 per month every single month, in 30 years, you will have around $57,000. But here's the trick, and always, please always remember this, whether you make it or not. 100% of people that fails doing this is because they don't have the discipline to not touch their money. That's just it. It's the only reason why not everyone in this world is making millions. Nah, maybe not. Maybe the economy will fall if everyone do that. But it's the reason why people that invest their money do not actually make money. Every single time you are tempted to touch that money, but you beat that impulse, you defeat that impulse, that evil impulse, and you keep your money untouched, you keep your money virgin there. That's the moment when you actually make your money grow. Do not touch it if the index is in a downtrend. Do not touch it if it just went up very, very fast. Don't touch it ever. One thing I always say to my friends is that think about money, but in future terms. What I mean? I mean that if you are right now on the streets, on the mall, whatever you are, and you have $5 in your pocket, you don't actually have $5 in your pocket. Think the way that you have $50 in your pocket in 30 years. That machine this morning didn't cost you $2. It cost you $20 in 30 years. If you only plant this little tiny thought in your mind, you'll begin saving little amounts of money that in the end will sum up a large investment. But not only that, that would be a significant advance in our personal finances. I can't stop talking about this without mentioning the problem with the market timing. I know so many people that stops themselves by investing just because they have these thoughts about the market's too high, it's an all-time highs, I will better wait for a better opportunity, stuff like that. But the truth is, the only truth is that nobody knows what's going to happen with the market. Nobody knows if the market's going down the next year or if we're gonna have a crash, a big crash on the markets the next month. Nobody knows. In fact, what is way more common is that people lose the opportunity of getting a great price on any of these indexes, and just to realize that a year or 2 years later the price just went up 20, 30, 40%, and they actually lost that rally. So that's it, you guys. I hope you enjoyed this video. I will try to be uploading at least 2 videos a week. I will try to be analyzing a couple of stocks every week to see what opportunities we may have on our market and some stuff like that. So subscribe, hit the like button, share this video if you enjoy it, and see you in a couple of days.